We also look at all four major asset categories: a commodity category, which gold and silver are part of, though they're monetary metals, stock markets, bond markets, and foreign exchange. And all these factors look to us to be helping to promote silver. And I think the stock market is in a major topping process, just like in 2000, 2007, where it made a new high that teased everybody, and that was the crowning touch. Okay, and then it had made a great mistake. And that's those topping processes. And when it corrected it in a huge way. Silver's in the opposite situation. Where's gold going? I'm not going to predict, except to say it too will advance more sharply once this spread breaks out. It just won't be advancing anywhere like silver. And if you go back and look at those two prior bull markets, the 1980 peak in gold, the 2011 peak in gold, they both were eightfold multiple moves from the prior bear low over a different span of time, but both were eightfold dimension moves in price. Gold would have to be $8,500 to be an eightfold move from where it bottomed in 2015. So you want to do the percent of where silver might be if gold goes to 8,000 and silver's, let's say, at 3% or something. Okay, anyway. So there's a whole bunch of factors here, but I think the key factor now for silver and gold, because gold will go up too. When silver accelerates, gold will also go up, but it just won't accelerate to the degree that silver will. That's the key technical to watch right now if you're involved in these markets. I know when people look at their daily price charts and weekly and monthly, they say, oh my gosh, I got to take profits. It's been too much, too easy. It isn't even compare to these situations. In fact, it's on the doorstep of them.
Unlike gold, silver is both a monetary and industrial metal. Its demand is soaring, driven by the clean energy transition, particularly solar technology, where silver is essential for photovoltaic cells. Silver is also a hidden backbone in electronics, AI systems, and 5G networks, where its conductive properties are unmatched. But recycling silver is nearly impossible. Once embedded in devices, recovery is too costly. This creates a growing supply-demand imbalance. Unlike wheat or copper, where higher prices trigger more production, silver output is tied to other metals like zinc and lead. That means rising prices don't quickly bring new supply.
We don't keep up with that metric, that particular metric, because silver is, we know when we look at the annual production output of silver and the annual industrial consumption, for example, it's tight. It's been tight for several years now. It's not improving. There's no excess. And yet demand is rising because solar energy production, especially from the Chinese, they need silver in the solar panels, the voltaic cells. Silver is also a microscopic but ever-present use in virtually all the technology like people like to rave about, AI and so forth. There's silver in there. It's a great conductor. One of the problems is once you put it in there, it can't be recycled out because it's such a trivial amount that it's hard to recycle out. It's not like you can pull out an ounce of silver. You know what I mean? So recycling silver is not really viable. And the other issue is when a given market goes up in price, it entices what? More production of that product, of that commodity. Like grain goes up, people produce more wheat and soybeans and corn. Or if copper goes up, they're enticed to produce more copper. Okay. The problem with silver is most of its production doesn't come from silver mines, which would be directly impacted by rising silver. They would be enticed to up their production. It comes from zinc, lead mining, and copper mining. So those miners aren't particularly motivated by a sharp increase in silver because it's marginal to their overall production. So you can take silver up dramatically in price and it's not going to cause a dramatic increase in its production. That's sort of a unique situation. But all these factors are there. They've been there. It's just finally silver, to the extent that it has made a mistake. Many markets do this. Price too low for too long, too high for too long. When they correct the mistake, it's usually very jolting. If you're not there, you miss it.
Global silver production has been flat for years, while industrial demand keeps rising. The majority of silver is mined as a byproduct, leaving its supply relatively insensitive to price changes. This structural limitation makes silver fundamentally different from most commodities. Even if prices triple, copper or lead miners won't flood the market with new silver. As a result, silver remains trapped in an underpriced cycle, sitting far below its historical highs in real dollar terms. Markets often correct such distortions violently, and silver's suppressed price hints at a coming revaluation. The setup mirrors historic mispricings that ended with explosive rallies.
Now, many people are talking about a short squeeze going on in silver. Brian wants to know, is this overblown or is this actually a dynamic playing out right
It,
now?
it could be. A lot of these short-term metrics, like looking at the CFTC readings of, the who owns what and how much, and whether there's somebody's trying to repress silver or not, they don't matter. The real picture is the bigger issue that we've been talking about, is that you've got an asset here that is in no way priced fairly compared to gold, compared to copper even, okay. And if it's made a mistake, as we argue it has, and it triggers key technicals, and we think that technical now is that ratio between silver and gold, the spread relationship. It's telling you, okay, I made a mistake, I'm going to correct it. Oh, sure, there'll be headlines along the way that people will think are the causative factors, but they're not. They're just simply exposing what already existed or some new element that comes into play.
One of the most important signals to watch is the gold to silver ratio, historically a reliable indicator of trend shifts. When this spread breaks down, silver typically accelerates at a pace far beyond gold. Analysts now argue that this trigger level is close, potentially unleashing a rapid repricing. Market headlines may point to short squeezes or speculative trades, but these are surface-level distractions. The deeper reality is that silver has been undervalued for decades. If the ratio breaks, silver's climb may not just be incremental, it could leap to triple digits, reshaping how investors and institutions view precious metals.
But the real issue is the mega issue we've been talking about. It's underpriced in reality terms, in relation to the value of the dollar, the quantity of money units, in relation to the price of gold, et cetera, et cetera. And when it makes up for that mistake, it's going to do it joltingly. And we're arguing that highly likely when that spread breaks out, expect probably with a correction in the middle. So don't assume it's just here to there. It's here to halfway and then there. But in the next 6 months, silver could leave the page and be in a new reality. Sure, you can have major drops in silver, but they're not coming back to $30 or $50. You might be at 150 or 200 and have a correction back to 125. No, you don't want to be there then. But the key is to catch the move into the new reality. And I think we're on the doorstep. People want a reason. Well, I mean, just the one reason alone, the value of the dollar in terms of its buying power. Heck, the price of a paper towel roll has gone up more than silver. Okay, since 1980, probably. So you get the point. And I think that's where we are. But the issue is, what was the signal that gave you that? It wasn't that it was going up and just sort of decided to go higher. In both cases, there was a clear horizontal trigger level on the spread that said, okay, out of here. And we're at that door right now.
Some analysts project that silver could surge toward 100, 150s, or even $200 an ounce within the next major cycle. While corrections are inevitable, the long-term trajectory suggests a structural revaluation. Unlike past bubbles, this move wouldn't be based purely on speculation, but on a convergence of industrial demand, limited supply, and monetary instability. Compared to copper, gold, and even base metals, all of which have exceeded their past highs, silver remains stuck beneath its 1980 and 2011 peaks. This glaring anomaly signals not just opportunity, but a potential generational mispricing about to be corrected.
We've canned that, by the way.
Yeah,
We
no,
thought that might be a target. Our assumption now is at least 100 once the spread breaks out, and I think we're on the doorstep. And we cover that week by week, day by day, sometimes. That you're going to gush to 100 to 200, and I'm not sure which, but this 60, 70 we had is that's out the window. We've altered that view. We also look at all four major asset categories: a commodity category, which gold and silver are part of. They're monetary metals, stock markets, bond markets, and foreign exchange. And all these factors look to us to be helping to promote silver. And I think the stock market is in a major topping process, just like in 2000, 2007, where it made a new high that teased everybody, and that was the crowning touch. Okay, and then it had made a great mistake. And that's those topping processes. And when it corrected it in a huge way. Silver's in an opposite situation.
As inflation chips away at the dollar's purchasing power, silver's long-term undervaluation becomes harder to ignore. The U.S. money supply has ballooned by nearly 90% per decade, weakening real value across the economy. Everyday goods, from food to paper towels, have outpaced silver's growth since 1980, highlighting its suppressed status. When silver corrects this mistake, the adjustment will likely be fast and shocking, leaving latecomers behind. Like past market errors, tech stocks in 2000 or housing in 2008, the turning point comes suddenly. For silver, the breakout appears imminent, and investors may soon witness a historic transformation in its role and price.
We don't pay much attention to that 50 level except to look back and chuckle. Copper's above its 2011 high and its 2000 and 1980 high. Silver made two highs roughly around 50 in 1980 and 2011. Okay. Gold's above its 2011 high. Heck, I can find you a bunch of base metals that are above their 2011 high, yet silver's a dog and needs to stay in the hole, right? Okay. Okay. There's a mistake been made. Markets often make excessive mistakes, both upside excess, bubbles, so forth. And then when they break, people say, why did it happen? Well, it happened because of what it did, not because of what's going to happen to it, but what it did already. That was an error, an investment error, an analyst error over the years. They underestimated, overestimated. Silver's been capped in real dollar terms so low. Because if you take, silver was $50 in 1980 and was near $50 in 2011, and it's still below there now in real dollar terms. Remember, the dollar degrades because it increases in supply about 90% every decade, the quantity of paper, okay? Therefore, it's sort of a junior version of the Weimar Republic, okay? Not quite as bad as Venezuela, but it's ongoing and it persistent. That's why gold continues up, over the decades. In 1980, what was it? Couple hundred, $800. Okay, now it's 3,500, 3,900. Excuse me. Silver's way behind. Okay, now the question is it justified or is it not? And fundamentally, we can make arguments that no, it's fully unjustified. It should be a lot higher. We don't pay attention to that. Yeah, there are fundamental reasons why it should be. We pay attention to its technicals.